In this video podcast, we're going to be answering the question, how locum doctors should pay themselves through their S corporation. In this podcast, we're going to be covering what every locum doctor needs to know about reasonable compensation, payroll, as well as distributions. And if you watch and you listen to the entirety of this podcast, we're going to be going over some very important concepts, including why use an S corporation, how to pay yourself, common IRS triggers, best practices. And welcome to the Locum CPA podcast. My name is Stephen Lee, a CPA that specializes in locum medical professionals. In this podcast, once again, we're going to be going over how you as a locum medical professional should and how you should be paying yourself through your S corporation. And the first and most important question that we always get, and I always get, is why use an S corporation? We have to start there. We have so many choices, whether it's an S corporation, a PLLC, or a partnership, right? Why an S corporation? And this really comes to several reasons, but really it's for the tax savings. And I'm going to get into that in a little bit later in this podcast, but the tax savings related to an S corporation versus if you just operate as a PLLC or a partnership can be immense. The tax savings can be immense with an S corporation versus those other entity types. So once again, whether you're using an S-Corp, a PLLC, or a partnership really depends on your goals. Also, how much 1099 income as a local medical professional you are earning. If you're not earning very much, and when I say not very much in terms of 1099, I'm saying sub or under $80,000 a year, okay, of 1099 income. So that's always a question. How much locum's income will justify an S corporation? And I say anything greater than $80,000. And the reason why is, as I'll get into this, as you continue to listen and watch, there are definitely administrative costs that come with this. So you want to make sure that you are in the right range, right? In terms of income from your locums jobs, right? It has to be 80,000 or greater to really justify and see the tax savings of starting an S corporation. Because a lot of you local medical professionals who are listening and watching, you earn very high 1099 income. You know, sometimes in the couple hundreds of thousands of dollars, some of you exceed $1 million of 1099 income, which is great. So how do you structure yourself the best way and to save and legally pay the least amount of taxes necessary? And that's going to be through an S corporation. Once again, the S corporation, the reason why you are an S corp, it helps you legally reduce your taxes. So with an S corporation, if you're thinking about it or you already elected S-Corp status, there are two ways to pay yourself. The first way is through a W-2 salary, which is going to be subject to payroll taxes. If any of you have ever had a job outside of residency, whether it's a part-time job, a full-time job, worked at a hospital, you know that with a W-2 salary, there's something called FICA taxes, right? That's Social Security and Medicare. Those two are considered payroll taxes. There's also unemployment taxes, things like that at the federal and the state level. However, the two big ones are Social Security and Medicare. We're going to call that payroll taxes for this, okay? So with your W-2 salary, you are subject to payroll taxes. And the second way you pay yourself is through something called distributions. And distributions, this is the important part here, they are not subject to payroll taxes, okay? So we have W-2 salary, which is subject to payroll taxes. We have distributions, which are not subject to payroll taxes. One important concept to remember here is both W-2 salary and distributions are subject to income taxes at the federal level and sometimes at the state level. And the reason why I say sometimes at the state level is because some states don't have a state income tax, like Florida, Texas. Some of those states don't have state income tax, so you're not subject to state income tax if you work in those states. But once again, W-2 salary and distributions, they're both subject to income taxes, federal and sometimes state. However, the big distinguishing factor once again here is with the W-2 salary, you're subject to payroll taxes, while distributions, you're not subject to payroll taxes. So this is where the magic really happens, right? Where you have to determine what is a reasonable W-2 salary versus what is your distributions. Because the game here really is you're trying to really maximize your distributions and minimize your W-2 salary, right? Because you're paying less taxes on those distributions. So how do you justify, and the IRS knows this, they are tracking S corporation shareholders and owners like yourself as locums professionals, they're looking at, they're scrutinizing this very highly these days. The first thing is a IRS rule that we have to be aware of is something called reasonable compensation. Reasonable compensation, in short, is RC. We're going to use that acronym, RC, for reasonable compensation in this video podcast. So the IRS rule is you must pay yourself a reasonable salary or reasonable compensation before you take any distributions, no skipping, right? So a reasonable salary, RC, reasonable compensation, those are interchangeable. That's going to be extremely vital. So a lot of locums professionals that I meet with and I talk with in the very beginning, they have no idea, and that's okay, on how to determine what a reasonable compensation or salary is. That is totally fine. You're very normal. If this is you, this is totally fine. You are not alone. Please know that you are the majority, not the minority here, okay? So with a reasonable compensation, there are several ways you can determine that. But the one that I recommend and I put all my clients through is an RC study, an RC report. That's an individualized report that is really going to be very specific to the location, your specialty, the number of hours, the tasks that you perform, using census reports to really determine what is the right reasonable compensation for you and where you're working and what you're doing. Okay, so the RC study is the number one way to really justify the salary. Number two is using something like salary.com, right? You can look at census reports, things like that. You can kind of DIY. However, the RC report, once again, is the most specific and it's catered to you and your specific situation and where you're doing your locums jobs. So why do the RC study? Why look at salary.com? It's really to keep documentation in case of an IRS audit, to really justify that salary number or that salary that you're taking before distributions, right? I've had cases in the past where the IRS will do an informational audit. Well, they will request documentation in regards to how did your client determine their salary that they're taking from their S corporation? And all that is necessary is to send them the RC report that was completed for that calendar year. Once the IRS receives that, they are good because they are looking for support and to justify a reasonable salary, right? And I'm not saying that the RC report, you're trying to go for $1, $10, $20, like $100, something really small. It has to be reasonable. That's why we need a justifiable support in case the IRS ever comes knocking, okay? So how do you run payroll, right? Once we've determined what our reasonable salary is for the year, once again, I recommend do this on an annual basis. Run an RC report with your CPA on an annual basis, right? Usually we do this for my clients at the end of December or early January, right? Each and every year. So we have that documentation ready. So how do you run salary, right? How do you run payroll? Once again, the first and the best recommendation is to use a payroll software like Gusto, ADP, or QuickBooks. We recommend Gusto if you're going to DIY this, right? Because Gusto's platform, and please note, I am not a paid sponsor or anything like that. Gusto just makes it so much easier. The language that they use is a lot more, I guess, palatable, right? They bring it down to layman's terms. So using Gusto is a great solution to run your salary. And why use a payroll provider? It's going to save you so much time versus you doing it manually because there are tax returns that have to be filed in relationship to your salary on a quarterly and an annual basis, including issuing a W-2 form from your S corporation. They also have to withhold taxes and submit them to different taxing agencies, whether it's the IRS, whether it is your state, whether it's for unemployment. All these things, you do not want to do it manually. So I highly recommend using a platform like Gusto or ADP or QuickBooks to really run your salary. And once again, this comes after determining your reasonable compensation, right? So you have the first step is determine that reasonable compensation, then choose a payroll provider. Why distributions matter, right? Once again, the first way to pay yourself is through a salary, W-2, and we just talked about that. The second way really is through distributions, right? Remember that pie chart, right? If we have 1099 income, half of it, let's say, is salary, half of it is distributions, right? That's the second way you pay yourself. And distributions really can be defined as the profits paid to you after salary, okay? It's the profits paid to you after salary. And once again, distributions are not subject to Social Security and Medicare taxes. And this is where the savings happens if you're an S-Corp shareholder. Once again, the distributions are not subject to payroll taxes. Versus if you stayed a PLLC or a partnership, right? Then you're going to be subject, all of your net profits are subject to self-employment taxes, right? So you really want to save, once again, if you're above that $80,000 threshold, by establishing an S corporation. Common IRS audit triggers. Let's go over these right away because this might be you, right? The first one is taking no salary through your S corporation and having everything be distribution, right? The way that they know that you did not take a salary is when you file your annual S corporation tax return, there's a line there for salary on the tax form for officers or shareholders, right? If that line is blank, that is a trigger for the IRS. So you don't want that line to be blank. And you also don't want that line or whatever number's on there unreasonably low, right? That's why you need that RC report, that reasonable compensation study to be done to make sure whatever appears on that line is an actual reasonable compensation. And the third IRS trigger is not filing a W-2 or paying payroll taxes, right? That's another thing that the IRS does look at. So you want to make sure you're covering that you have a salary. Secondly, it's not too low. And third, that you're actually filing W-2s and paying payroll taxes. Let's go over best practices here. Okay, how do we do this? What's the mechanism here in terms of what is the protocol? How do you pay yourself? And for myself and my clients, we like to pay ourselves either on a monthly or on a quarterly schedule. And the way that that works here is if we do this on a quarterly basis, and this is what I do with my clients, is what I tell them is every quarter, once we establish the reasonable compensation at the beginning of the year, we divide that by 4, right? So we run payroll on a quarterly basis. And let's say that payroll is $100,000. Okay, let's keep the number simple. Then every quarter, we run a gross salary of $25,000. Anything on top of the $25,000 is considered distributions and they can take those, okay? Once again, we make it nice and easy for our clients and we do it on a quarterly basis. And as a locums medical professional, because your income might fluctuate from quarter to quarter, some of you like to front load or back load a lot of your locums hours during the year, right? So when you work with a knowledgeable CPA who works with local medical professionals, we actually cater to that based on the number of hours, not only in the previous quarter, but also in the upcoming quarter. Because sometimes your hours are not determined until a certain date. You don't know. I wish we had a crystal ball. We don't really know until the end of the year, right? How many hours. So we really dictate and we cater based on the number of hours in the current period as well as in the following quarters, okay? So once again, the way that this really works is on a quarterly basis, you take that RC report in the beginning, divide that by 4, that's your quarterly salary. Anything above that salary, you take as a distribution. You will have to pay quarterly estimated taxes on those distributions, but check out my previous video, and I'll leave an information link on quarterly estimated taxes, right? And that's on the distribution portion. The second best practice is to really separate your business and your personal accounts, right? Because some of you have not opened up a business or a PLLC or a locum specific bank account that's tied to your S-Corp or your PLLC. You want to make sure you're separating those, okay? The third is consider some tax saving strategies like a solo 401k or a SEP IRA. Those are 2 really big tax saving vehicles that you can really defer and not pay taxes on that income and really save for retirement. So you're killing 2 birds with 1 stone here, right? You're saving for retirement and paying less tax in the current year. And lastly, the best practice is to work with a knowledgeable CPA. And I'll leave a link in booking a schedule once again in the information section below. So take a look and see if you want to fill that out and you want to meet with me one-on-one to see if it's going to be a good fit. I'll recap on how to pay yourself. A quick summary here. First, set a reasonable salary, an RC report. Second, run payroll and file taxes. Third, take distributions after you run salary. And what I recommend is on a quarterly basis. And fourth, stay compliant and save taxes. And lastly, subscribe to this channel because you don't want to miss all the great tax saving strategies that I have for you as a locum medical professional. And one thing I really request is please leave a comment or question that you would like me to cover, right? There's a lot of questions that you might have. I would love to hear what you have to say so that I can cover that in a future video. Thank you for watching, and I wish you all a wonderful day, and I'll see you next time. Bye.